Good afternoon to all of you. Hope I can be heard well. So, first of all, on behalf of Central Bank Studies of Central Bank of Sri Lanka, let me warmly welcome all of you for the high-level seminar on digital financial transformation, building better financial systems. Now, Central Bank Studies is celebrating its 40th anniversary this year, and this particular high-level seminar is one of many events we have organized to mark this milestone. And for today's high-level seminar, we have selected a topic which has gained a significant attention in past few years. So all of us know the technology is evolving in a rapid pace and continues to change in the landscape of financial system in the whole world. Sri Lanka is no exception. So at this point, central banks must play the leading role of safeguarding the financial system and interest of the general public also. In that line, continuous dialogues are necessary on how regulatory approach should be while taking these developments into consideration. So the objective of this seminar is to bring different perspectives to one forum and enable better decision making for all stakeholders. So we have invited Professor Douglas Arner from University of Hong Kong to deliver the keynote address of this seminar. We warmly welcome you, sir. And his speech will be followed by a panel discussion happening with participation of experts representing different corners of the industry. Today's panel consists of Mr. Mark McKenzie, Senior Financial Sector Specialist, the SEACEN Center, and Mr. Kumaratunge, Director of Payment and Settlement Department of Central Bank of Sri Lanka, and Mr. Thilak Piyadigama, Chief Executive Officer of SGB Bank, and Mr. Rajesh Mani, Country Manager for Sri Lanka and Maldives for Mastercard, and Mr. Dassana Wijesekara, Director, Solutions Architecture from WSO2. The panel discussion will be moderated by Assistant Governor of Central Bank of Sri Lanka, Mr. R.A.A. Jayalath. We warmly welcome all of you also for this seminar. So, viewers, so all of you can interact with us and send us your questions through the Q&A option in the Zoom. And if you are joining by Facebook, you can write your questions as a comment in the Facebook post as well. So without taking much time, let me now invite the Deputy Governor of Central Bank of Sri Lanka, Mrs. Yvette Fernando, to deliver open remarks for the lecture and introduce Professor Arner to the audience. Over to you, madam.
Good afternoon to all. First of all, it is my great pleasure to welcome the keynote speaker, Professor Douglas Arner from University of Hong Kong, the moderator, the panelists and participants to this webinar on digital financial transformation, building better financial systems. Thank you all for accepting the invitation and joining with us today. Also, let me thank CBS team for organizing this webinar on a timely topic for our country with the digital transformation happening at the moment. Today, the world has become more digitalized with advanced technology and use of safe, trusted, and reliable digital ecosystems are vital in adoption of new digital products and services. Over the years, digitization itself has evolved, adding more value to the products and services. During the COVID-19 pandemic, more businesses have converted to digitalization to meet the impacts and recover from the pandemic challenges. Digital financial services can also gain more inclusion over this time as people are more into online services to fulfill their daily activities. In order to facilitate efficient and inclusive digital economy, it is important to create seamless transactions and interoperability of all components that allows connectivity of different users, solutions, and devices. Further, seamless payments should be facilitated in digital environment as well as physical environments with interoperability of digital payment solutions. As you all may be aware, Sri Lankan government is working on digital identity and will resolve many holdups such as data exchange and reduce the friction of the digitalization process of financial services. Also, we all can see banking is experiencing a major transformation with adapting new banking technologies to keep up to date with new demands and requirements from the public. Further, with expansion of the mobile application usage in different business domains like travel, healthcare, entertainment, education, etc., and allowing digital payment becomes key feature of those mobile applications. Ensuring the customer protection and regulatory supervision becomes critical, adapting these new trends with financial services. With increased risk in cybersecurity, monitoring and preventing the threats should be actively operational, and regulations should introduce to the existing legal framework. With the digital footprints of the customer and more data on customer financial transactions, value-added financial products and services can be implemented with technologies like artificial intelligence. Fintech allows the innovation, competition, and commitment to open, free, and contestable markets. They have shown results over the world by giving people access to banking services and breaking barriers presented by gender, race, geography. However, this will change the future banking sector, job roles, and capabilities in recruitment. The financial sector would have to transform the products and services to compete with the fintechs. We have seen many examples such as M-Pesa, Bcash, where fintech has expanded the boundaries, introduced technology to connect the gaps of current financial services. Comparing the global fintech markets, Sri Lankan fintech industry can introduce vast range of financial products and services to the country. Expanding the financial services with biometrics-based technologies and IoT products and services would encourage millennial, Generation Z, and our future market to get into digital financial services. Big techs are becoming prominent in financial markets with the underlying global customer base, global network, and brand name. They possess more potential to reach to the future customer base. This might hinder the local market innovation and create a monopoly in the industry. Technological trends change over the years, and nowadays customer has given more authority over his or her financial records. Sharing the database on the customer consent is used in many solutions like open banking, know your customer check modules, etc. These approaches have enhanced the customer experience, minimizing the bottlenecks of data privacy. These mechanisms aim to promote consumer confidence, ensure transparency of the purpose of the shared data usage. The past few decades, we have seen customers become more knowledgeable, and as a result, their expectations and demands are evolving fast. Customers expect to make payments conveniently and faster, but with higher security. Carefully analyzing these trends and changes, identifying the opportunities and challenges, and apply to the future developments, regulatory amendments with long-term vision in financial services is very important. As all of you are aware, over the past few years, the Central Bank of Sri Lanka has come a long way towards a less cash society whilst accomplishing numerous goals to increase digital financial inclusion. The central bank has made great progress in achieving the objective of digitalization through its many programs. The recent successful initiatives include the establishment of the national QR code called Lanka QR, the launch of the Fintech regulatory sandbox in early 2020, the completion of the drafting of the National Data Protection Act, which was facilitated by the central bank, working on implementing a national remittance mobile application, and the successful completion of deployment and testing phase of the proof of concept of a blockchain-based shared KYC platform. More projects on the pipeline as open banking, central bank digital currency, digital banking, which would be announced in near future. If I share quick insights over the next projects in the pipeline, we have seen that 80% of countries doing research on central bank digital currency, what we call the CBDC. The designing, developing, and running a CBDC system would be major undertaking for a central bank. However, a CBDC would play a very critical role of the future local digital financial economy. CBSL has initiated CBDCs as a key digital payment initiative and has been actively studying CBDCs since 2017. CBSL has been closely following the approaches taken by different countries towards the successful implementation of CBDs in their countries. International cooperation on CBDC could provide an avenue for improving the cross-border payments. Next, digital banking. With its predominant digital presence, digital banks have great potential to enhance banking processes, reduce cost, increase agility, offer convenience, speed, outstanding personalized service to the end customer, and particularly promote financial inclusion for the unbanked and underbanked population. This would be the next era of banking, and we should prepare and be ready. We should develop scalable, standardized, secure digital payment systems and take our national digital infrastructure to be connected with other countries like Lanka QR and facilitate the interoperability payment flows to customers. As the regulator, the central bank should ensure the stability of monetary policy, capital flows, and the role of the financial sector while exploring the new opportunities in technological evolvements such as CBDC for the betterment of the country. The central bank, with collaboration with other bodies, are already assessing the impact of such innovations and possibility of their adoptions by assessing their benefits and impacts both regionally and globally. Central bank has also initiated to explore the possibilities of implementing RegTech and SupTech capabilities in Sri Lankan context. Moving on to the speaker, Professor Douglas Arner from University of Hong Kong, who specializes in economic and financial law, regulation and development, has joined with us today as our keynote speaker in this high-level webinar. Professor Arner is the Associate Director of Hong Kong University, Standard Chartered Foundation Fintech Academy, and is the Associate Dean of the Faculty of Law at Hong Kong University and co-founder of the university's Asian Institute of International Financial Law. Professor Arner contributes as visiting professor and senior visiting fellow in many reputed universities, including University of Melbourne. Professor Arner has published 18 books and more than 200 articles, chapters, and reports on international financial law and regulation, including most recently reconceptualizing global finance and its regulation and the RegTech book. Professor Arner led the development of Introduction to Fintech program, which was launched with edX, an open online course provider created by Harvard and MIT in May 2018. In addition, he has served as a consultant with, among others, the World Bank, Asian Development Bank, UN, APEC, Alliance for Financial Inclusion, and European Bank for Reconstruction and Development. So we are delighted to hear the insights that you are bringing on the discussion today with the knowledge and experience in FinTech and RegTech in financial conclusion. I congratulate all the panelists on today's discussion who are experts on digital ecosystem and hope your insights and inputs would contribute on the digital financial transformation journey of Sri Lanka. Let me conclude stating that building a better digital economy is a collective effort, and it is a pleasure that today's discussion will put energy into this collaborative task. We need to take the necessary actions now to keep the acceleration with other countries to develop a digital economy in Sri Lanka. The digitalization process will increase the financial inclusion, resulting benefits to all in our country. Once again, I warmly welcome all of you, the guest speaker, all the members of the panel for your time and contribution to this webinar, and thank and for the knowledge and experience that you would be sharing with us. With that, I would like to now invite Professor Douglas Arner to deliver his speech.
Thank you very much, Deputy Governor, and thank you very much for the invitation to be here today, and congratulations for the 40th anniversary of the Center of Banking Studies. And I think all of us very much appreciated your opening remarks. And in many ways, I think you foreshadowed most of the things that I'm going to be highlighting today. And certainly I've worked over the years with the central bank, particularly in the context of the Alliance for Financial Inclusion and a number of other international organizations. And I always find that the Central Bank of Sri Lanka is one of the leaders in this area. And so it's a great pleasure to be with you and your colleagues here today. Now, I'm going to share my screen with a few slides. Today, I'm going to speak about some of the themes that the Deputy Governor just mentioned, this idea of digital finance, digital financial transformation, and building better financial systems. And much of the work will be with my friends and co-authors, Dirk Zetsche at the University of Luxembourg and Ross Buckley at the University of New South Wales. And I think that a good starting point is looking a bit back and looking a bit forward. And I think that if we look at the past decade, the 2010s, if we look at the past decade of finance over the past decade was really dominated by three different issues. Very much the global financial crisis dominated most discussions about the financial sector from 2008, really almost up until the impact of COVID-19 early in 2020. One of the big areas where we saw that come out is in the context of dramatic increases in the amount of regulation. I think that the 2008 crisis very much highlighted some of the risks, particularly in the context of risks of systemically important financial institutions, of interconnections, and bred an entire effort from the standpoint of building better regulatory systems to prevent those sorts of events from happening again. And of course, technology. And when we think about technology in financial services, if we think about the last decade, technology was really about the application of new technologies to the financial sector, about new entrants, in particular startups, but also a range of tech and other companies entering into financial services. And, you know, over the last decade, I think many of us have been in lots of discussions about how do you go about regulating new innovation? How do you deal with the disruption of new entrants? And I think that if we think about that last 10 years, it's something where it set the stage for a very different 10 years going forward. And I think if we look at the major themes that are likely to dominate finance and its regulation over the next 10 years, we can really draw out three. The first of those is around technology. And I think that's something that we see, and we mark this into a number of periods of fintech evolution. And we actually mark the most recent period of digital financial evolution, Fintech 4.0, as starting in 2019. And essentially, this is a period characterized by a very different role for technology. In other words, I think that we can think about FinTech 4.0 as often being characterized by pervasive technologies, the emergence of digital financial platforms, either from the financial sector or from the tech or telecommunications sectors, the advent of big tech in finance. And of course, if we think about the period of finance prior to 2008, one of our big challenges was the economies of scope and scale that characterized financial services. And much of 2008 was about the problems that could result from too big to fail, too connected to fail, too big to save. And much of our post-crisis regulatory reforms were about building frameworks. But as it happens in many places, financial institutions have actually only gotten larger over the past 10 years. But I think it is when we add in the tech aspect that the differences really emerge. And of course, if we speak about technology, if we think about data, we often talk about network effects, the idea of the benefits of ever more data, ever more participants, ever more interconnections. And the model that has really emerged has been largely one of private companies emerging as owners and controllers of vast amounts of data. And we have seen this applied both in the context of financial services as well as other areas. And I think that if we think about technology going forward in the 2020s, we're thinking about technology of a very different scale and impact than we saw ever before. And that poses particular opportunities, and we'll talk about some of those, but also particular challenges. The second of those is around sustainability. And of course, we're just getting ready to start the Glasgow meetings of COP26, prefaced by G20 meetings, where this is likely to be a major area of discussion, focusing in the context of climate change. It's also the case that 2030 is our target for the UN Sustainable Development Goals, including, of course, climate change. And I think that COVID and the last year and a half, 2 years of experiences have really changed our discourse and way of thinking about sustainability. It was an important issue prior to COVID, but I think what we've seen over the past 2 years is the emergence of a new consensus about this being absolutely a central issue going forward. And this, from the standpoint of finance, is very important. But at the same time, ongoing tensions in the context of geopolitics, of globalization versus fragmentation. And I think these trends were discernible before COVID-19, but I think COVID has really driven all of these trends forward. And it's something that if COVID had happened in 2008, for instance, the technology that we have today across most of the world that has enabled us to deal with lockdowns, to deal with communications like we're dealing with now, to deal with electronic payments, that much of this was not sufficiently mature to have enabled us to deal with COVID in 2008 in the same way that we are today. But of course, because of the digitization of everything that had been developing for the previous 3 decades, the advent of COVID has really driven forward that process of digitization of everything across finance, the economy, communications, pretty much everything. And I think that if we look at this COVID-driven digitization, one of the areas where we can see this most dramatically has been in the context of digital finance. And I think there are 4 areas where we've seen this in particular. The first is in digital payments and central bank digital currencies. The second is around RegTech and SupTech. The third is around AML and market integrity. And the fourth is around big tech and the role of data. I'll spend just a few minutes on each of these and some of the trends and lessons that we're seeing everywhere. certainly central to COVID responses all across the world have been digital payments. And this is something where we had already realized the strong benefits of digital payments for financial inclusion, for development, for SMEs and the like. But I think COVID has really highlighted very directly how important the ability to make and receive digital payments is to life of everybody. And I think when we look at this, that realization comes into a very specific and important technological context. And if we look at payments over the past 30 years, there has been a revolution in digital money and payment systems. And we can think about this from both the centralized standpoint as well as the decentralized standpoint. We can think about the evolution of electronic payment systems like RTGS systems, the advent of M-Pesa in 2007, the growth of Alipay and WeChat Pay to 1 billion customers each over the past decade in the context of mobile money and mobile-based payment systems. We can think of more recently the evolution of fast payment systems, all on the centralized side. And at the same time, we can also think about starting with Bitcoin and the first application of blockchain in 2009, evolution of decentralized technologies and their impact on payment systems. And in many ways, we see these trends coming together with the announcement by Facebook, now Meta as of yesterday, of its Libra project, now Diem, in mid-2019. The idea of this, a global big tech firm launching a global system of electronic payments supported by its own cryptocurrency. And I think what this highlighted to many of us was that the potential of technology to completely transform money, payments, and finance was here. It wasn't really coming from Bitcoin and cryptocurrencies. It was really coming from the potential of big tech companies applying giant platform technologies to build systems that could rival or even surpass those of states. And I think when we think about this idea of FinTech 4.0 and platformization of finance, it is really that Libra announcement in mid-2019 that is the seminal start. Of course, driven by COVID-19, and it's the combination of these that we see expressed in this dramatic growth in central bank digital currency projects all over the world. The launch of Project Bakong in Cambodia or the Sand Dollar in the Bahamas, and the expected nationwide rollout of the eCNY in China across next year. And I think we can see this reflected in the context of the G20 CPMI cross-border payments roadmap, the idea that the technology is there to build better systems. And as a result, we are seeing both at domestic levels, central banks all over the world looking at how can they use technologies via CBDCs and a range of other structures to improve their payment systems for resilience, for sustainable development going forward. But we're also seeing this at the international level. The second area where we've really seen this is in the context of RegTech and SupTech, regulatory technology, the use of technology for regulatory, supervisory, compliance, and infrastructure purposes. Basically, the idea of using technology to build better regulatory compliance and supervisory frameworks. And I think that and this is in some ways the area where we have seen some of the most dramatic changes. If I think to February 2019, one of my last trips before COVID in 2019 was for a financial stability board meeting in Singapore. And prior to COVID, international regulatory meetings almost always occurred on a face-to-face basis. Over the last year and a half, they almost never occur on a face-to-face basis. And I think that familiarity and comfort with technology out of necessity is driving a completely new interest in use of technology by regulators and supervisors from the standpoint of digitizing their own operations, as well as digitizing their information collection processes, digital regulatory reporting, as well as analytics to basically support the digital transformation, not only of their own operations and performance, but also of wider financial systems and wider economies. I think in the past year and a half, in the context of ways of thinking, we've seen what I would have expected to happen over 3 to 5 years. And the numbers of presentations that I have given this year to regulators and central banks around the world on RegTech and SupTech strategies, it's probably been the topic that I've talked about the most this year. And I think that this is something that we are seeing large numbers of regulators and supervisors really looking at how they can use technology across their operations. Market integrity, which I'll mention in just a minute, financial stability, market development, tech risk, and very much all aspects of digitizing their own operations. This kind of takes us to our third major area, which is market integrity. And it's something that if we think about market integrity, if we think about the structure of international standards setting for AML and CFT, if we think about the FATF, we think about the 40 recommendations, we think about the way that the Know Your Customer system, customer onboarding system works, essentially it's what I would characterize as a 1970s technology analog framework. In other words, when it was devised, it was definitely the best we could do. We focused on using the banking system to collect information about its customers in order to be able to identify areas of concern from the standpoint of criminal and terrorist use of the financial system. But I think what we all knew before COVID was that the system didn't work very well. It's very expensive. And not only is it very expensive, it doesn't really do a very good job of actually achieving its objectives. In other words, we generally use it most after the fact. You have a criminal prosecution, then you chase information about those people from the standpoint of the financial system. Likewise, a terrorist attack. You will then, after the attack, chase information through the financial system to try to identify patterns. So it's something that I think we all recognized was very expensive and not necessarily very effective. And COVID has really driven a different way of thinking about it. And I think that this was reflected most importantly in new digital identification guidance from the FATF in 2020, as well as a number of other statements from the FATF in 2020. And essentially, the core of those is a recognition that at the basis of customer identification and tracking money laundering and terrorist financing is identification of individuals involved. And at the end of the day, at least as good as paper-based identification, and in many cases better than paper-based identification, are actually sovereign digital forms of identification, particularly ones that are based on biometrics. And this is something that this realization is building on experiences which we were already seeing with digital identity around the world from the standpoint of how powerful it was from a financial inclusion standpoint we're also seeing it increasingly from the standpoint of a market integrity standpoint. And so countries all across the world, as is Sri Lanka, are building digital identity frameworks. We're seeing this both for individuals, but now we're also seeing an increasing effort from the standpoint of corporate and entity-based systems. And on an individual economy basis, probably a sovereign digital ID framework for individuals is achievable in each individual country. However, information flowing across borders is more challenging. From the standpoint of companies, it's really necessary to be looking both at the individual jurisdiction as well as the cross-border process. And I think what we are all seeing is a process whereby jurisdictions, particularly major jurisdictions like the EU and even the United States, are looking at building very different AML and CFT systems, often centralized data stores, and we're seeing something like this in the United States with beneficial ownership, or network stores of data, something that we're seeing in Singapore or the EU, to provide a much better framework of actually collecting comprehensive information about financial market participants and transactions that is actually better than the information that they are able to get via the individual banks. And I think that this is a very important direction going forward. The third area is really around this idea of tech risk, the idea that all of this digitization brings with it new opportunities, but also new risks. If we think about cybersecurity is a topic that as digitization has increased, so have cybersecurity concerns. And of course, this is a topic that is already very familiar in the context of Sri Lanka. Data protection, data security, data privacy. Finance is increasingly the most globalized industry, the most digitized industry, and the most regulated industry. And what this means is that when we are dealing with digital finance, we are dealing with both finance as well as data. And this is a challenge because you may have quite different frameworks for dealing with data regulation and financial regulation. And increasingly, we're seeing how those are coming together. One aspect that has been driven everywhere by COVID has been an increasing reliance out of necessity on digital financial infrastructure, not only on data storage, but on cloud systems. And this is something that had been very slow, particularly amongst globally systemically important financial institutions, but has been driven dramatically forward by COVID. And so questions around new forms of digital infrastructure, data provision services, cloud services, et cetera, and also, of course, the role of TechFin, of big techs entering in. And we've begun to see, starting with China in 2019 and developing rapidly over the past 2 years, the rollout of a range of new regulatory approaches to try to deal with the new too big to fail financial institutions like Ant in China or Tencent, and trying to think through not only the financial regulatory issues, but also the data issues and even the competition issues. In other words, how do you deal with a firm like Ant or Tencent that has achieved such a control of vast amounts of data, which is tremendously beneficial for financial inclusion, providing credit to MSMEs in particular, but also gives them an advantage over all others? And how can you get the benefits of data aggregation without having the costs of market dominance, oligopoly, monopoly, and control that kind of seems to go together? And I think that as we come out of, or as we adjust to the new world of a sort of post or co-COVID environment, we're increasingly focusing on these questions of sustainability, but in particular, how do we go about building better financial systems to support not only resilience in the face of sustainability crises. And of course, we think about COVID. COVID is, as a health crisis, a sustainability crisis. If we think about the sorts of sustainability crises as a result of climate, of sea rise, of migration, all of these future forms of sustainability crises, I think we know that it's very important that, one, our financial infrastructure is robust. In other words, that in 2020, we didn't have a global financial crisis. Had we had a financial crisis, that would have made the COVID situation far worse. And instead, finance has not been part of the problem in 2020 and 2021 as it was in 2008. Rather, finance has been part of the solution. And so we need to build financial systems that are more robust. And I think the regulatory frameworks that we built after 2008 have played an important role. We also need to build financial systems, particularly financial infrastructure, that supports resilience and response to crises. And I think what we saw in the context of COVID is that very much aspects of digital financial infrastructure, like digital inclusion, the availability of mobile phones and internet access, of accounts, whether bank accounts or wallets or mobile money accounts, of electronic payments, that it was this combination of infrastructure that was so very valuable in addressing the sustainability crisis when it happened. And I think as we think forward, it also provides a framework to support broader SDG objectives. And it's interesting because all across the world, central banks are, of course, looking at sustainability questions from the standpoint of risk, robustness, resilience, but also how can we improve the way that our financial system functions in order to support the sustainability transformation that is becoming increasingly necessary as this decade progresses. And I think the lesson that is coming out of this around building better financial systems focuses on four different pieces. Digitization, the fundamental basis of digital finance and wider sustainability is around digital access. In other words, having access to mobile phones and digital communications and the internet. This is really fundamental. And I think that across the decade, across developing countries all over the world, this is going to be one of our biggest focuses. How do we address digital exclusion of individuals as well as businesses to bring them in to widen the benefits? Second, from the standpoint of infrastructure, accounts, whether those are wallets, mobile money, or bank accounts, and mechanisms to simplify opening of those accounts, particularly based on digital identity frameworks for individuals and increasingly entities, electronic payment systems, and the ability to use this infrastructure for a variety of government purposes, but also to reduce the cost of entry and customer acquisition for new business models in order to support wider economic transformation and development. Our second aspect is really around regulatory approaches. And a starting point is to review regulation, to think about where there's a need for a more functional approach in some cases. And I think the trend is towards risk-based, graduated, proportional regulation on an activities basis as things are small, but as they get bigger and move closer and closer to the too big to fail end of the spectrum, the need to put in place entity-based regulation as something moves from, in our framework, too small to care, to too large to ignore, to too big to fail. You probably can focus on activities-based approaches up to you're too large to ignore, and you'll need some sort of size and scale approach to begin to catch entities as they reach a certain size. The necessity of using RegTech and SupTech to build better systems, and of course, integrating testing and piloting. And from the standpoint of the wider ecosystem, human capital development. As we think about digital inclusion, financial inclusion, we also need to think about digital literacy and financial literacy and how we can build some of these things into systems. And I think the real risks that we can see are often emerging in the credit context. And some of the concerns in the context of China were about very rapid development of consumer credit as a result of access made very easy by digital inclusion and financial inclusion combined with platform-based credit. And so I think that one of our big focuses is going to be around education, human capital development, digital literacy, and financial literacy. As we think about innovation, we need to think about R&D support and funding, both from the government as well as linking private funding and international funding to startups and innovation companies to support future productivity, but also sustainable development and transformation. And in this case, an innovation hub we find to be particularly valuable. Looking forward, I think we're going to be focusing on those last mile challenges. In other words, that digital access question, the financial inclusion channel, and how do we link some of the ESG resources with SDG outcomes, data, of course, and finally, digital literacy. So that is, I think, a broader picture of the big trends that we're seeing from the standpoint of digital financial transformation coming out of COVID, but also looking forward over the next decade or so. And as I said at the beginning, I think the Deputy Governor reflected many of these trends already in the context of issues and projects being undertaken by the Central Bank of Sri Lanka. Thank you all very much. Looking forward to our panel discussion.
Hi.
Arner, I think Kushan will tell us whether we have a Q&A on this, or we'll go straight to the panel discussions.
Yes, sir. So now it's time for the panel discussion. And as I mentioned earlier, all of you can use our Zoom platform and its Q&A option to direct questions to us, as well as you can insert your comment questions in the comment box in the Facebook post. Both ways are possible. So that is the way. And as I mentioned earlier, this will be moderated by Assistant Governor of Central Bank of Sri Lanka, Mr. R.A. Jayalath. So with that, let me hand over controls to Mr. R.A. Jayalath to commence the panel discussion.
Thank you, Kushan. We listened to Professor Arner bringing a strong case that digital innovation is transforming financial services. Digital payments, open banking enable fintechs to drive greater access and convenience to both wholesale and retail users. Together with them, AI, cloud services, big tech, digital payments, DLT are transforming wholesale market. The areas as diverse as financial market trading, RegTech, and Fintech. The host of new firms have sprung up to supply new technologies to meet customer demand, compelling many existing ones to consider digital transformation a strategic priority. These developments have potential to make markets more diverse, competitive, efficient, and inclusive, but could also increase concentration. The underlying economics of intermediation combined with new technology may lead to concentration among both traditional and new financial service providers. Monopolistic or anti-competitive behaviors by big technology platforms are already being scrutinized. As financial services move towards similar technology-driven configurations, regulators are grappling with the questions of how best to regulate and supervise landscape that is increasingly characterized by new players and business models, and to address potential challenges to financial stability, financial integrity, fair competition, data privacy, and consumer protection. However, it is essential for economies to aim at fostering benefits of digital transformation in finance, particularly to reduce costs, frictions, increase efficiency, competition, narrowing information asymmetry, broaden access to financial services, and things like those. Regulators are mindful of the potential risks to the financial system and customers. For instance, Bali Fintech agenda, a policy agenda put forward by the World Bank and IMF in 2018, advocates embracing the promise of fintech while managing risks to consumers and to the system. Reinforcing competition and commitment to open, free, and contestable markets are seen as foundation for innovation and consumer choice while maintaining level playing field. So with that, so let me move on to our panel discussion proper. And I have the pleasant task of introducing our eminent panelists here with us today. First, Mr. Mark McKenzie. Mark is a senior financial sector specialist at SEACEN Center. He serves as SEACEN Center's subject matter expert in crisis management, recovery, and resolution planning, supervision, and systemically important financial institutions and financial integrity. Prior to joining the center in 2016, Mark frequently served as an independent external financial sector technical assistance advisor for IMF and European Union and the World Bank on missions to countries in Africa, Eastern Europe, and Caribbean. Next is Mr. Dharmashiri Kumaratunge, Director Payments and Settlement of Central Bank of Sri Lanka. He counts more than 30 years experience in central banking and worked several departments in different positions, including economic research and information technology. As Director Payments and Settlements of Central Bank of Sri Lanka, he works as Country Director of SAARC Payments Council, Alternate Country Director of Sri Lanka in Asian Clearing Union, Board Member Sri Lanka Financial Services Bureau, Board Member National Institute of Business Management, Secretary National Payment Council, which is the highest decision-making body of payment systems in Sri Lanka. Next, we have with us Mr. Thilak Piyadigama. Thilak is Chief Executive Officer of Sanos Development Bank PLC. He possesses over 32 years experience in banking technology industries. Prior to STB, he was at Nations Trust Bank, Standard Chartered Bank, and John Keel's Holdings in senior management positions. Thilak is a digital evangelist and was widely credited for launching FreeMe, the first digital bank in Sri Lanka, and open banking API when he served as Chief Operating Officer at Nations Trust Bank PLC. Thilak launched UPay, Sri Lanka's payment platform, recently for STB Bank in 2019. Central Bank of Sri Lanka recently appointed him the chairman of working group of financial institutions to coordinate implementation of Lanka QR across Sri Lanka. Next, we have with us Mr. Rajesh Mani. Rajesh is a country manager of Sri Lanka and Maldives for Mastercard. Rajesh, a successful entrepreneur turned corporate professional with over 25 years of work experience in strategic planning and execution across various aspects of payment technology in banking, telecommunication, and retail sector. He has previous work experience in American Express and Airtel Money. Next, we have with us Mr. Dassana Wijesekara. Dassana is a director, head of solutions architecture, banking and finance services industry, practice WSO2. He is an enterprise software architect, full stack developer, and technology evangelist with multidisciplinary skills over 20 years of experience. He specializes in open banking and has helped multiple banks, credit unions, and building societies to achieve compliance and provide more consumer-centric products and experiences. Dassana is based in Sydney, Australia. So now let me move on to the panel discussion proper. If I may explain you the format of today's discussion, we will have 3 rounds of questions and answers. So I, as the moderator, will pose questions in the first 2 rounds, and third round will be open for Q&A from the audience. So you can make use of your Q&A feature and chat feature, as Kushan mentioned, to raise your questions. So I will try to put them as much as possible to the panelists for their response. So given the time permit, so we will be able to answer all your questions. If the time is restriction, I may have to cluster them together or select some of the general ones to put to the panelists. So basically, each panelist will have between 4 to 5 minutes to answer each question in the first 2 rounds, and third round will be open for everyone. First 2 rounds, the panelists are willing to add on to someone's answers or responses. You feel free to do so. So to begin with, my first question goes to Mark. Mark, financial technology, fintech, has taken center stage in financial inclusion. Many believe that low-cost, far-reaching digital solutions hold key to reach out to 1.7 billion people worldwide who are still excluded from formal financial services. Can you tell us how this accelerating financial change would transform economies? Mark, over to you.
Thank you very much, Mr. AG. I'm certainly delighted to be here.
You can call me Ananda, Mark. I'm Ananda Jayalath.
Okay, thank you very much, sir. I'm certainly delightful to be here, and on behalf of the Executive Director of the SEACEN Center, I bring you warm greetings and congratulations on your 40th anniversary, sir. I'm certainly always delighted to participate in events hosted by the SEACEN members, and I've been to Sri Lanka for one of the SEACEN courses, and I've been treated very kindly. I've had trips to Kandy. I just wish it was much more pleasurable time to actually be there. In terms of your question, in terms of how is digitalization transforming economies, it's difficult to answer that question coming after the Deputy Governor and Professor Douglas Arner, but I will certainly try to offer a perspective and to bring some differences from what you've already heard. And what I would love to do is to address three areas. But I want to start with a definition first and foremost from my perspective in terms of what do I consider to be digitalization. And the way I want to do this, I really want to share with you my origin as a son of Kingston, Jamaica. As a little boy, I actually spent a lot of my time with my grandmother in rural Jamaica, and she was a farmer. So from that perspective, I'm deeply passionate. And I see myself as having a purpose in terms of how the financial system is developed. I have a passion towards financial inclusion and financial stability and sustainability. So from that point of view, I want to consider digitalization as an innovation, as impacting productivity and leading to wider benefits. And the reason I'm saying this is we have to recognize that digitalization and technology has some nuances. It is not all benefit. And I think both the Deputy Governor and Professor Douglas Arner did an excellent job in highlighting some of the nuances around some of the developments that we have seen. So let me try and contextualize some of this for you. And I want to talk specifically on the key drivers for the transformation that we're seeing, as well as I want to spend some time on the future of money and some of what you've heard around central bank digital currency, and of course to speak as well to some other risks that you may have not have heard earlier. I mean, certainly you've already heard there is a supply push and there is a demand side to some of what we're seeing. On the supply side, there's the new entrants, and certainly Doug has already highlighted, for example, the big tech. I mean, these are all leading to tremendous benefit, economic benefit to consumers. On the supply side, you have already, on the demand side, you've already heard that consumers are demanding, easier access, they're demanding speed, low cost, etc. So a lot of these developments have the prospect of profound benefit to the wider economy. And we're seeing it in terms of the digital wallets. We're seeing it in terms of the P2P lending and all that. However, from my standpoint, I think we have some questions to answer from all of these developments. And we have to revisit questions such as, for example, what is the purpose of finance? And how is this purpose evolving? And if in answering that question, how would we answer it from country to country, given the different stage of development in different countries, or even for different income groups? So that's important. Even if we take into context countries in conflict, how will this purpose differ? And then, as you've already heard, I mean, how can financial sector policy, regulation, supervision contribute to a more inclusive economic development, especially when digital technology is increasingly driving the change? So obviously, the 1.7 million people who are currently excluded from the financial system are amongst those that are likely to benefit the most. And we know, and this audience know, because we are in a part of the world where financial inclusion is a big part of the policy, that there are a number of factors driving the need towards a digitally, financially included society. We have issues such as the number of migrants and refugees and displaced persons. We have the impact of climate change on livelihoods, especially in rural areas. And then we know as a fact that within the current banking system, with both regulation and the pressures on profits, that there is this thing called de-risking. So let me try and turn very quickly in my remaining time to speak to this other aspect, the future of money, and touch slightly on the central bank digital currency. In economic terms, digitalization should result in productivity gains, growth, improved competitiveness, and a more robust economy. And last but not least, greater prosperity and inclusion and stability. Perhaps most critically, it is that digitalization can support a green and sustainable development. For example, we can talk about how Fintech is impacting the green economy and sustainability. We can talk, and we've heard already about how RegTech is changing how we think about things. SupTech is changing how central banks think. But one of my key areas of interest is on the subject of digitalization on the future of money, and more specifically, central bank digital currency. And we have seen tremendous interest in central bank digital currency. But let me just caution that while CBDC has potential to enhance this financial inclusion aspect, it's not a panacea for everything that we are trying to solve within the financial system. So let me close this segment to highlight a couple of risks. Some of them you may have heard from both the Deputy Governor as well as Professor Arner. Technology is obviously changing our financial system, The wider use of digital technology has a dark side to it. And we only have to look to some of what we have seen recently, the solar wind attack, the Canolan pipeline attack, although those are outside the financial sector, those are threats that we have to be conscious of. Then you've already heard about things around data protection and data privacy, which brings us to the point, and we haven't spoken much about the importance of data governance, because that is critical. So I would love to leave it there for now, but I want to say clearly that a lot of these developments have tremendous promises for those who are excluded. I am from rural Jamaica, and I saw my grandmother toil the soil, worked hard, and I think this is what we're trying to resolve. Thank you very much.
Thank you, Mark. Digitalization should bring prosperity to all. CBDCs, may, though not a panacea, has the potential to bring more inclusive society. So now let's move on to our next panelist. I would like to pose this question to Mr. Thilak Piyadigama. Thilak, in Sri Lanka, despite having higher number of people with bank accounts, activities in many such accounts are minimal. We are yet to see fintech, digital banking, etc., creating such real impact on financial inclusion, particularly in terms of outreach, cost, creating broader convenience, etc. How do you see or explain this, and what need to be done to change the current status quo? Thilak, over to you. Thanks.
Thank you. First of all, thank you for having me. And also, I want to congratulate CBS for their 40th anniversary. And AG, thank you for having me here. Well, I think before I answer your question, I think I would say having so many accounts, I think about 80% of Sri Lankans are having a bank account. I think it's a bit of a good story. But however, maybe usage about 50% of that. So that is where I think the solution should be. But I think having 80% is a good foundation, because if we did not have, your problem is worse. I think sometimes not having also can help. I think if you go back to story of Kenya M-Pesa, since they do not have banks and bank branches very close to their villages or cities, they got into mobile money. So they basically leapfrog everything without going through that. But in the context of Sri Lanka, since we have this number of accounts, and also high literacy rate of 90 plus, I think we are in a different situation or different context. So how actually the fintech can help in this situation is, now obviously when you have the foundation, the bank account, then linking your bank account with the app or fintech solution is become slightly more easier than not having an account, right? So I think that's, to me, I say take as a positive, number one. Number two, Sri Lanka is blessed with, I think, a few other I would say assets. Like for an example, we have a world-class mobile network which has connected 30 million phones. So Sri Lanka has only 21 million population. That means we all have about 1.5 connectivity. But obviously, out of the 30, I would estimate about 10 to 15 million to be smartphone. I mean, that's a huge number for a size of a nation of Sri Lanka. So they are all virtually digital enabled citizens. And also, when you look at the other stats, like we know that about 90% of our internet traffic goes through these mobile phones. That means we have got our foundation pretty well. In fact, even though you call it a mobile phone, it's not. Actually, it's a supercomputer, and phone is just an app. So if you can use one app, Facebook is a second, maybe Instagram is a second, and go on, and WhatsApp may be the next. Putting a bank app is pretty easy, because you're used to that whole digital world, and you may not be a digital native, but you're used to it. So I think this helps us to drive the digital financial inclusion, I think, even in very rural areas of Sri Lanka. And also, when you look at the level of awareness Sri Lanka has created with digital, with various things what we are doing, I think that also, I think, adding more like icing the cake. Now, for an example, it was mentioned that, yes, I was involved in the launch of the first digital bank in Sri Lanka. Even my previous experience of Nations Trust and Stand Chart, when you look at, they are more of, catering urbanish crowds. But my current bank is a totally opposite. It's rural crowd. I think it was a wonderful experience for me to come here and do digitalization. So when I arrived in this bank 2 years ago, we did not have much digital. We had something, right? But we did not have to go through everything what other bank went through. Went to the state of the art technologies, and we have everything now what any other bank can have. So that itself is a plus point. When you want to do it, you can go to the best and the most appropriate technologies to cater to your clients. So obviously now when you look at talking about my own experience, the UPay, there are so many rural folks using digital technologies and apps and so on, because now it's made available to them. Probably earlier, I mean, they may have heard, but probably they haven't. Now they are more like given and they're using it. So, I mean, our transaction volumes and value going up. In fact, my bank, I'm happy to say now we do about 80% of our transactions through digital unassisted channels. Like I don't touch any of those transactions. The customer starts, custom execute, it goes through. In fact, while I was talking to you while I was listening to your speeches, I was doing some funds transfers myself. So, life has become that much easier. Now, obviously, when it comes to money, people are a bit reluctant to, put your money on an app, right? So, it requires to build the trust and the confidence on the system, and also the user experience part of it. That's how you can get it right. I'm very happy to say, I mean, all the banks in Sri Lanka has got 1 or 2 apps, and they are offering, I think, a pretty good experience. So as a result, I mean, you can see we ourselves know that the check volumes and value in Sri Lanka going down every quarter about 10%, which is good news. And then our all digital payments across banking industry going up. That means we are connecting more and more enterprises, maybe SMEs and corporates, onto digital platform. So even though we did not start in a very structured manner in the sense of sometimes you can talk about a roadmap, you can talk about proper planning there. But I think everyone has done their part in a sort of a based on infrastructure availability. Then we have connected ourselves, and also now we can connect the dots as well. That's why we have this huge growth of digital technologies even pre-COVID, and we saw it. Of course, COVID helped us to drive it more, and that accelerated our probably the digital growth, which was I think fantastic. But having said all these the positive things, I also must, I think, draw attention to the cash in circulation, which is actually not very good indicator. So pre-COVID, I remember it was 600 billion. And whenever we out and spoke about Lanka QR, I said, look, that is what we are after. But now I have to say we are after 1 trillion rupees. So it has almost hit 1 trillion. So, when you bring cash in circulation, which has no economic value to the country, I think that is where I think digital can help. I think I would say big time in Sri Lankan context. So if you bring that to the banking system, even 50% of that, a lot of money in the banks that we can virtually offer. I don't say zero cost credit, but it's very low interest rates to our consumers, particularly the SMEs and MSME, which is 52% of our GDP, and can take care of that the folks and help them develop their businesses and add more value to the economy and the country. So I think when you put all this together, we have tremendous opportunity. I would say we are just about to take off to the next level. So most digital technologies, I mean, I would call them exponential technologies. The growth is first very horizontal, but it comes to the tipping point and it takes off, and it becomes first it goes horizontal and then it goes vertical. So I think we are almost there. And also the other piece which I must mention, I think the payment infrastructure we have in Sri Lanka, particularly with the support of central bank and the guidelines, the interbank payment systems and so on we have, I think they're all helping to connect these dots. So with all that put together, I mean, what is our readiness? I would say, I think I would rate Sri Lanka very high. Thank you very much.
Thank you, Thilak. Building trust and confidence in the overall ecosystem and creating better experience for customers is very important for improve the inclusiveness. Thank you for that. And so let me now pose my questions to Mr. Dharmashiri Kumaratunge. Dharmashiri, adoption of digital financial services poses challenges to financial institutions as well as broader financial stability. How do you see this? And as regulator, what challenges would you see the regulators in its future role? Over to you, Dharmashiri.
Thank you, Mr. Jayalath. I think, first of all, I want to thank CBS for organizing this important session. And this is, I think, commendable effort, as it is a high time to initiate the discussion on digital financial services as a Deputy Governor and the Professor Arner and also Mr. Jayalath. I think, given the brief introduction and the Professor Arner, I think, giving the comprehensive analysis for these digital products, what I think currently having in the world and region, and also in, I think, Deputy Governor has also explained the recent developments which have taken place in Sri Lanka. So according to that, we know that current financial ecosystem is experiencing in major transforming due to the emerging digital finance services and products. So that to be in line with the new developments taking place in a global context and to cater to the demand for such services, so mainly arising from the public. So we have seen that the last 2 decades, there has been several changes has taken place in Sri Lanka financial landscape, as well as the companies with regulatory reforms to ensure the safe and sound financial system in the country. So that's a major, I think, financial stability is a major concern as a regulator. We are thinking on that one. And the mainly technological innovation is radically reshaping the activities of the current financial market. So this is a common to all the, I think, market in the region and all the other countries also. So Fintech describes the business that names it. So it's providing the financial services by making use of the software and the modern technology. So we know that the Fintech use a large amount of and the different type of data. So that arise in and the concerns for the, especially for the data protection. And Mark and the professor also, I think, highlighted that area, the protection and the privacy, data privacy and the data governance, the Mark also highlighted, and bank secrecy, cybersecurity and the data management is also the major concern as a regulator. So if we consider as a regulator, so we are not considering only the data, but the technologies that Fintech use, such as cryptography and artificial intelligence and cloud computing, distributed ledger technology also bring the new challenges for the regulator. Then as a regulator, should be proactive to be on par with the new developments. So that's a major challenge I think each and every regulator is having. So if we go through this, the competition or the greater competition having with these Fintech products and the services due to the rapid technology adaptation of by major firms and also by the startups mainly. So that leads to the consumer choices based on the convenience of such products and services. The consumers are always, I think, selecting the convenience of the use of this product. For example, if the bank A is producing some apps and also bank B also having some apps, then the consumer is selecting the convenience place to go there. So if they are having some, difficulties to onboard the customers and the use of that app, so I think consumers are not willing to adopt these things. So these products are getting popular among the citizens and the tech companies because we have broad range of financial services which we can access and deliver to the digital channels, including the payments, credit, savings, and remittances and insurance. So these sectors are, I think, almost we are using at present in the digital payment ecosystem. As a central bank, it is our responsibility to facilitate adoption of such finance services after guaranteeing that those adoption do not cause instability of the finance system. So there's a major concern we are having. Also, we need to ensure that the individuals are protected and well aware of this use of these products. So we know that if the products are, I think, enough in our market, and there are many other products in having for the payment system or use for the payment system, payment digital system, but so people are not using, then so there's a problem with getting the awareness of these products. In the other case that the rise in the fintech have raised concern of the financial authorities, and as a regulator, so we can expect more unseen challenges in the future. So something like whether we need to expand the regulatory and supervisory cycle to get supervising or the on-site supervision on these fintech products. And also we have to consider the new types of digital finance services fit into the existing regulation. That's also a major concern as a regulator. And there's a practice way to identify and monitoring and mitigating the risk of innovation and the fintech firms. So those are the things we are considering as a regulator. And under existing regulatory perimeters has to be broadened to cover the emerging providers of these financial services, and new players may pose challenges for day-to-day financial supervision. So it is increasingly challenging to balance the competition and the stability. So both among financial service providers and across myriad players of reconfigure the financial products value chain. So accordingly, as a regulator, as a supervisor, so policy tools will have to be adopted soon than the later. I think we have to immediately get the actions or the follow the new innovation. As a regulator, we have to take the moving innovation technologies to regulate and supervise the process more advanced and efficient and accurate way. So for these things,
thank you, Mr. Kumaratunge.
Okay.
Yeah. So regulators are mindful of facilitating fintech innovation and ensure that financial stability will not be harmed in the process, and consumer protection and convenience are paramount. Thank you again, Mr. Kumaratunge. My next question goes to Rajesh. Rajesh, many researchers suggest that digital financial transformation are yet to see significant inroads to or significant addition to financial inclusion. How do you see this, and what need to be done in a country like Sri Lanka?
Right. Good
Rajesh,
afternoon. Yeah. Good afternoon and Ayubawan. First and foremost, it's a congratulations, many congratulations to CBS on their 40th anniversary. On behalf of my co-panelists, my esteemed co-panelists, and myself, I wish and hope all of you and your loved ones continue to remain safe and well. In response to the question that's been raised, it is my firm belief that digital financial transformation is an essential prerequisite for financial inclusion. And the reason I tell this is it's a lot like laying a highway or a road for you to have cars and other vehicles running on top of it. Now, financial inclusion can have many drivers or trigger points depending on the country you're in, depending on the level of collaboration within that country between various players, or depending on the geopolitical situation of that country. And like Mark alluded to this, right, depends really on the level of maturity of the financial ecosystem of that country. But what is undeniable is that if you want financial inclusion, you definitely need financial digital transformation. Now, let me try illustrating this with one, and if time permitting, two examples. And I will go to my favorite place, which is Africa and Kenya. And yeah, rest assured, I will not talk about M-Pesa. I know the Deputy Governor has alluded to that. Professor spoke about it. My co-panelist Thilak spoke about it as well, about M-Pesa. But what I'm going to talk to you about is about the rural hinterlands of Kenya, where a lot of women micro-entrepreneurs struggle. They run these typical mom and pop stores, what we call Kade in Colombo. Now, one challenge that they have faced, and which we've seen is common across rural economies across the world, is that they're predominantly cash driven. And their modus operandi is that they would have a little bit of cash with which they purchase goods from either big FMCG companies or their distributors, sell it within their village, get the money, and then use it to generate further stocks. Now, this obviously is a very small, it's a finite framework, if you notice, because it really is dependent on the amount of cash that the person is able to generate. Therefore, they don't have access to formal credit, or what we today take for granted. Now, this is an area where Mastercard thought that we could do something. And when I'm saying Mastercard, I'm talking of big corporates, right? So we've tied up with Unilever and a couple of financial institutions to create a platform where we digitized the entire sales data of these small stores or these kades, right? That then became a surrogate for financial institutions to offer credit to these store owners. Now, depending on this credit, these shopkeepers, these ladies, these micro entrepreneurs were able to purchase more from these FMCG companies, buy on credit, sell on cash, generate more revenue, and buy more stocks, and pump in this money into the local economy or the local villages in which they work. Now, if this isn't an example of financial inclusion, I dare say I don't know what is. And to give you a sense of what these kind of numbers reflect, after these people became a part of this platform, Unilever has come back and has made a statement that they have seen a 20% uplift in the sales of each of these stores, which essentially means you have taken the revenue, the income capability of this person from X to 1.2X. Now, I know I'm running short of time, and at the start, Mr. Jayalath told us that it's between 4 and 5. I'm at 4.5. And maybe in the second half, I'll probably talk about another example from closer home, which is India. But till such time, I will hand it back over to Mr. Jayalath. Thank you.
Thank you, Rajesh. So inclusion already happening when the digital transformation is occurring. So we'll may not be witnessing yet, but of course, many people will be brought into the formal system. So that could be something that we can witness even now. So my next question goes to Dassana. Dassana, experience in rest of the world, particularly with introduction of digital and open banking frameworks, shows that new non-traditional entrants in the financial industry can easily exploit the latest development in electronic communication and data management systems to reach millions of new customers. As developers that enable both traditional and non-traditional sector players elsewhere in the world, and in your experience, what benefits could be derived by financial institutions, regulators, as well as final consumer from such developments, and what would be the challenges to such players? Over to you, Dassana.
Yeah, thank you, Mr. Jayalath, and again, thank you for having me on this, distinguished panel. And I'm extremely delighted to share my experiences in, designing and implementing digital transformation systems and open banking compliances across the globe. If you look at what digital transformation means to the financial industry, it's all about how well we can collaborate using digital technologies. And open banking is a kind of extension for that. Open banking is a push either coming from a government or coming from industry players. If you specifically look at open banking and the open banking related, data collaboration that are coming from market forces can be seen in the US, Canada, the Korea, the Singapore, Malaysia. And we have government-driven open banking compliance push in the open banking UK, the PS2 in Europe, the consumer data rights in Australia, and Singapore, open digital economy program and things like that. Whatever the model, the digital transformation is looking at exchanging financial data and identity data, and as well as actions like pay this amount to this payee, or the data about your accounts transaction and your identity data. So when it comes to traditional players, things like big banks, the incumbent players,
they have built their IT infrastructure by themselves. They have to maintain their own data centers. Their operational cost is very high. They have to live with their legacy systems. So they have challenges in transforming their existing systems to match the agility required by the current market forces. But when it comes to the fintechs and neobanks and new entrants to the system, they come with the latest technologies, the agile cloud native technologies, and they don't need to build their data centers by themselves. They can use cloud and distributed systems. So they have an edge against the traditional players. But on the other side, the traditional players have built their trust with the customer for many years. But the neobanks or the entrants don't have that trust. So for traditional players, they need to invest on that trust, and as well as the data that they have gathered, doing transactions for many years. They are sitting on a treasure trove, a lot of data, right? So you can, look at the patterns. You can look at, the data that you have gathered. You can transform that data into information and then into wisdom. So that are the benefits that they have. So what I have seen is in most of the banks, they have taken fintechs or acquired fintechs to provide that digital transformation layer. And if you look at from the regulators aspect, in order to regulate a digital transformed financial ecosystem, the regulator itself need to have those digital capabilities. They should be able to monitor the transaction within this ecosystem real time. They should be able to generate reports. They should be able to manage this ecosystem real time using digital technologies. And on the other side, if you look at the customers, especially Generation Z and the millennials, they are looking at real-time experience, the liveliness, right? They want real-time information, real-time payment, ability to customize their payments, split payments. If they want to get a loan, they would like to get loan line in one day. The loan origination processes should be very fast. That's the liveliness that they're looking for, and they're driving the markets to move into that augmented use experiences.
Thank you.
So yeah.
Thank you, Dassana.
Thank you very much.
We can listen more, but unfortunately, time restricted. So agility of the system to fit the evolving environment is very important, and regulators and everyone need to have appropriate skill set and capability to meet with these challenges. So that is the end of round one. Let's straight away move to round two. The first question to Mark again. Mark, experience in elsewhere in the world show that fintechs have expanded their scope far beyond traditional microcredit products. They are tapping into technology to design, customize, and distribute a broader range of financial products tailored to needs of those low income, such as micro insurance, micro savings, or remittance products. In your experience, can such moves help financially excluded people to build things such as credit score or creditworthiness, etc., for enable them to come into formal financial system? Mark, over to you.
Thank you very much again for your excellent question. I mean, obviously, and we've heard it throughout the past hour or so, that definitely some of these developments are benefiting those who are excluded from the financial system. We have also heard that as we speak about digitalization, and obviously we have to think about those who don't have access to technology to access. So it's clear that their fintechs today are actually expanding beyond where they started in terms of the low-hanging fruit in terms of payments. But as we continue to look at these trends, what I would love to do in answering this question is to look at some emerging developments that are taking place, even here within Asia as well. And that is one where, for example, fintechs have now started to acquire banks. And then we have heard throughout this afternoon in terms of the entrance of big tech, and I've already touched on things like the future of money, but what I would love to do is to speak specifically to developments around stablecoins. And I'm sharing these because I work with an organization that is regional, and a lot of these are the topics that we constantly explore within our programs. I think in the case of fintech acquiring banks, this has reignited a debate around non-financial institution, non-banking institution owning banks, and concern about the ability to supervise such entities, as well as whether or not there are any financial stability concerns. Now, we may, when we contemplate this development, we have to think about it in terms of what are we, from a policy point of view, what are we concerned about with this kind of trend? And we have seen it in for example, in the US, Square's acquiring banking license, and we have seen other developments in Australia and elsewhere. So it is a trend that is likely to continue. So what then are some of our concerns from a policy point of view is issues around things like conflict of interest. We've already heard about things like anti-competitive practices and issues relating to concentration. And in terms of that, we have seen some developments in China around some of that. And then we have heard on things like, to deal with violation of customers' privacy and the ability to effectively provide oversight for such structure. But I think coming out of the global financial crisis, a big worry is if, as fintech grow and expand, and similarly with big tech, will they become systemically important and too big to fail, or in the event of financial crisis, how will the bailout work? And we know with COVID-19 that the public sector is stressed. So these are things that we have to be concerned about. And obviously, there's this issue of political influence as well. Of course, we have to think about the policy measures for such issues. The other, more specifically related to development with big tech, it's obvious that the beneficiaries of entrance of big tech is obviously going to be consumers, and we have already stressed the financially excluded. But these firms are a maker for data and the risk to abuse how they use data, and even the risk in terms of perhaps even, we're thinking of driving down costs, but, indirectly, they could actually result in an increase in cost of the delivery of services. And I've already spoken about the data governance issue. Not so much in terms of an Asian context, but more from a global point of view. Stable coins in this, at this spectrum of this development, is something that we should pay attention to. And we are beginning to see developments around, how the reserve funds are and whether or not they're really stable. So these are developments that we have to keep an eye on. So what I'm suggesting is that as fintech and big tech enter, as the scope expand, the beneficiaries are obviously going to be those that are underbanked and excluded. but I think we have to look at the trends in terms of, what is happening outside of the region and even here within the region of how fast fintech firms are growing. Thank you very much.
Thank you, Mark. Of course, digital transformation and improving the scope can certainly include inclusiveness, but of course, regulators need to be mindful of the conflict of interest, anti-competitive practices, too big to fail institutions, things like those. Thank you again, Mark. So my next question is for Thilak. Tech-enabled financial solutions and providers are instrumental in reducing operating costs, increasing efficiency, and reaching people in remote and rural areas. Similarly, digital and open banking, as well as use of artificial intelligence, etc., challenges business model so far adopted, as well as the very survival of traditional financial institutions. As an experienced banker, how do you see this evolving trend? Thilak, over to you.
Well, I think it's a very interesting area. I think certainly when you talk about AI and machine learning and so on, can help sort of fast track the whole process of lending. To the extent you can make lending sort of a automatic process without going through the traditional banking practices we have in terms of credit evaluation, more of a somewhat a semi-manual process. I mean, obviously, when credit is made available, when it becomes easy to access, the benefit it can give you to your economy is enormous. I mean, you can't count it. Like even smaller countries like take Singapore with 2.5 million Singaporeans and 2.5 million foreigners put together, 5 million people running such a large economy. It's because they have got the efficiencies right. So coming to Sri Lanka, I think given our digital literacy of about 50 plus now, literacy of 96, I think we actually can adapt this faster and we can do a much, I think, better job provided I think we get our sort of few things together. But I'm sure, as I said earlier also, I'm very hopeful and very optimistic that we have come to this point, we actually can go to the next level, right? I think it requires a bit of maybe regulatory changes. I mean, on the part of the government, as well as I think Deputy Governor mentioned, for an example, the digital NIC and a few other things I think can fast track the whole process. And also I think the currently what is being tested by Central Bank of Sri Lanka on the eKYC front, we can bring a lot of efficiencies. Once you have been KYC by one bank or a telco, can be used across any platform, any service to do that. So anyway, to cut short long, what I'm saying is technologies can not only make things faster and better, it can transform whole nation, right? And from the stories what I have read about the M-Pesa story in Kenya, I think it was able to transform the whole payment system in Kenya. It's because they were able to leapfrog that. So similarly, in maybe our context may be different to Kenya, but we have all the technologies with us, and it's just matter of I think a few banks coming forward and doing it. I mean, that's what part of the work what I'm doing in my bank in terms of delivering digital services in Sri Lanka, particularly in the remote areas, and it's assisted by, as I said, we have a pretty good mobile network, and it helps as well. And also from the regulated point of view, I know we also have passed some legislation recently in terms of electronic act and so on, that is helping. Now very recently we saw a lot of press about the digital signatures. In fact, my bank adopted digital signatures early part of this year, and so we have a lot of internal processes we have put on digital signatures, which are legal documents now, and even external documents like even loan documents now we sign through digital, but of course at very early stage. So going back to Reji, what you said about the getting the cost benefit, yes, I think up to a particular point is costly. Technology is costly and resources are very costly. But however, it comes to a point where when it takes off, there's no cost increase, but you have per transaction cost become virtually nothing. So I think that is where the digitalization can be called successful. Otherwise, it can be a bit of a vital event as well. But when you do that, I think you have to know what you're trying to get into, and you have to ensure that we cross that the early part of costly thing to a virtually no cost thing. It's more of, I think I would call monetization or democratization. We have to bring technology to that level. I mean, that's how you can say your success with your technological transformation or the endeavors. Thank you.
Thank you, Thilak. Of course, technology will be costly initially, but once the get going, so we will be able to see the costs minimizing or reducing, and consumers will see significant advantage. So financial institution, whether traditional or the new, they'll be able to see the benefits. So next question would be to Dharmashiri. Dharmashiri, while fintech holds tremendous potential, it also poses very real risks, especially for low-income customers as well as for regulators. In addition, to being an uncharted territory for regulators, the risks could also include lack of cybersecurity and data privacy, overpricing, overlending, fraud, etc. How do you see your future role as regulator, and what actions that CBS has taken or taken to address these challenges and risks while not hindering the development potential of the industry?
Thank you, Mr. Jayalath. I think, thank you very much for asking that regulator's perspective, and also the major challenge we are having is that while we are giving chance for the fintech developers to come to the market and develop their product, and also the challenge is that the regulatory part, then how we are going to, so without hindering this technology or innovation, so how we can do this regulatory part. So that's a major challenge. So while we are looking on that one, I think if we take this our country situation, so the country's digital literacy level, so there are many activities are taking place to improve the digital financial services and digital literacy in Sri Lanka. And so if we take this government agenda, the government has already announced that ambitious plan to improve the digital literacy up to the 75% by 2024. And Central Bank of Sri Lanka is also having that the payment system roadmap for 2024. So with this development and how we are going to have this our digital payment system, and also this how we can support for these new innovations. So without hindering for the new for the regulators part. Then so with that the Central Bank of Sri Lanka, we have taken several steps for development of this. I think for the development of this fintech environment. The first phase that the 2020. So we have introduced this fintech regulatory sandbox, and I think Deputy Governor is also mentioned. So these are major challenges having for the fintech companies to make this available their product to the market. Now, as a central bank, as a regulator, so we have given the I think chance for all the fintech companies to test their fintech solutions, and so from this fintech regulatory sandbox, they may able to have the access to test their system with coming for this fintech environment. So that's a major, I think, innovations we have done in 2020, even though we started 2 years back. And now all these fintech companies, they are having ability to, I think, test their system for this one. In addition to that, what we have seen in the market is that there are many apps are developing, and many fintech companies as well as the financial sector initiatives are also developing the payment system apps. So with the risk having for the apps, payment apps using each and everywhere in the market, including non-bank finance institution and also telcos also. So we have introduced this minimum compliance guideline for the payment related mobile application. So this is especially for the banks, financial institution and mobile payment operators of the country. And we target for this one with the development or the initiatives with the Lanka QR, national QR code we launched in 2018. So with that, so I think most of these financial institution has to adopt the minimum compliance standard, which we have issued in 2018 first, and the 2020 we have revised that one. So these things are issued with the risks which we have identified and arising from the market and cyber security and all the other risk involvement to minimize these. And according to that, web servers and also server-side infrastructure, the network communications also covered, each and every angle covered using this minimum compliance guideline. And I think, so in addition to that, we also initiated at the first stage for the data privacy or protection domain. So yeah, we work with this ICTA, and also I think now the ICTA is finally of this project of the Data Protection Act. And this is the important section for the Sri Lanka, because if you are looking for the digital banking and also open banking framework, so that I think data privacy protection domain is also required for the country. So that is also undergo. Yeah.
Thank you, Dharmashiri.
In addition to that, as a regulator is working to the financial system stability of the country. So in this regard, we understood that we have to play the key role in the regulation of the emerging trends, such as the virtual currency, blockchain, and the open banking and digital currency. Thank you.
Thank you. Thank you, Dharmashiri. Our regulator is mindful of bringing appropriate regulations without hindering the development of the digital transformation or development of digital transformation. So thank you again. This next question goes to Rajesh. Rajesh, economies of scale and scope and network effects are present in many aspects of financial services production, including customer acquisition, funding, compliance activities, data, and capital. Despite advances in technology, consumer search and assembly costs remain significant. These forces encourage rebundling and confer advantage to large multi-product providers, including technology firms or big techs, expanding into financial services from adjacent markets. As major payment service provider, how do you see your role in addressing important policy issues that could arise regarding competition, regulatory parameters, and ensuring level playing field, etc.? Rajesh, over to you.
Thank you. Thank you, Mr. Jayalath. I know we are short of time. We probably have 3 minutes to the hour, so I'll try to keep this as short as possible. Interesting question, because various countries are at various stages of financial system evolution or development, if you may. Therefore, I think it's incumbent on networks like us who operate across countries, across systems, to bring best practices that will help emerging economies like Sri Lanka, so that you don't have to reinvent the wheel. And I will talk about 2 instances where we have done this specifically in Sri Lanka. First one is around the policy framework bit, where we worked very closely with the central bank, in fact, with Mr. Kumaratunge's team on the open banking framework. In fact, I'm also part of the working committee on implementing open banking framework in Sri Lanka. What we did as part of that exercise is we brought in global best practices on how open banking works in other parts of the country, in other parts of the world, be it in terms of use cases that actually work, the various kind of fintechs that can operate, and more importantly, what kind of framework we need to put in place to ensure financial stability and security of the system. So that's one way in which we've contributed, or rather networks contribute largely to the ecosystem. And the second one is around regulatory parameters. And that's another point that you'd raised. And I know Mark alluded to this. A lot of my eminent co-panelists also spoke about data governance, data privacy. Now, at Mastercard and as a network, we work with a lot of regulators across the globe. We work with governments on helping them develop and frame their data privacy laws. We work very closely with the regulator on GDPR, for instance. And we brought those learnings, and we work with the government here. We work with the regulator as well to bring in those best practices again, to ensure we don't reinvent the wheel, and more importantly, to see what is contextual and what is relevant for this market. So that's another way in which, as a network, we brought in global best practices. And increasingly what I see is that if financial systems and markets have to develop, it has to be a collaborative, interoperable, and open approach. I think the days of having a closed ecosystem or a closed loop system is past, and only open and interoperable ecosystems will drive innovation. Thank you, and back to you, Mr. Jayalath.
Thank you, Rajesh. Interoperable systems are very important for smooth facilitation. Relevancy for the technology for the market that you're considering is an important factor. So the next, I'll move on to Dassana. Dassana, as an experienced service provider, what would be your advice in establishing framework for digital and open banking environment in a country like Sri Lanka? What would be the key ingredients of such framework?
Yeah, thank you, Mr. Jayalath. I think the key ingredients are, the first one would be the establishing a digital identity governance layer, where we can have one digital identity, not only within the financial sector across multiple domains, and bind, the privacy and security aspect into that identity governance layer. That is one of the key ingredients which underpins a successful framework. And if you look at open banking is a digital transformation in disguise. So we should come up with an open banking framework. It can extend from financial domain to other systems, like, as an example, the consumer data rights in Australia. That framework pushes the financial ecosystem players to adopt these new digital capabilities, expose their data, construct their data, and exchange this data in an open ecosystem. So that is one of the key ingredients where we push a framework to, push these individual players to build their digital capabilities. The other key ingredient is making the regulator itself capable of, working with these digital ecosystems, making them digital savvy, making that capability built into the regulator system. And as a government, we can establish an ecosystem where the government encourages, fintechs, the other private tech companies, the government institutions to play in this ecosystem and encourage, innovation and invention in the system. So if these components come together and play together, collaborate each other, and build that interoperability, we can probably build a better system, better financial system in Sri Lanka. Yeah. Thank you very much.
Thank you, Dassana. So interoperability, the ID layer are very important factors to bring, including other things. So that ends the 2 rounds of that. As moderator, I would pose. Next is the 3rd round. This is open for participants. There are already some questions in the Q&A. And first question that I've chosen out of this is how fintech is interconnected with financial literacy. Any panelist who take? Can I suggest Mark?
Yeah, thank you very much, AG. How fintech is connected to financial literacy. I think the starting point is that I think financial literacy is definitely a cornerstone of financial inclusion. And the reason I'm saying this is, sorry, if we look at traditional finance as we know it today, a part of what we experienced in the great financial crisis was a lack of awareness of products, financial products, the purpose of certain financial products, financial responsibility, personal finance, etc. What we have seen today in terms of fintech and digitalization, it is literally using the word literally as and not literacy, it's literally bringing finance to the tip of the unsophisticated and the unbanked. And these developments come with enormous risk to, farmers in deep rural areas, whether it's in Jamaica, Sri Lanka, India, or any parts of Asia or Africa. So it is imperative that we bring a greater level of awareness in terms of the products, the services, the risk. With COVID-19, we have seen scams, etc. So we have to bring this awareness. So from that point of view, financial literacy is a part of the cornerstone of greater financial inclusion and sustainability.
Thank you for the response. Next question that I can choose from here is that as part of its mandate, financial system stability, the CBSL undertakes surveillance and oversight of entire financial system. What is central bank's role, involvement, and measures taken in context of fintechs towards safe and efficient payment system? More appropriately, Mr. Kumaratunge, Dharmashiri.
Thank you.
You need to answer. Thanks.
Yeah, I think as a mandate for the financial stability, system stability is mandate for the CBSL, and surveillance and oversight is also undertaken by the different system. Like bank supervision is also doing the role for the financial system stability, and they are also doing this oversight, on-site and off-site supervision on that the bank supervision side, and also the other non-bank financial institutions doing the different department, non-bank financial supervision department, and for the major the digital payment side, so it has mandated and that if there are any digital payment side, then of course it has come to the payment and settlement system and payment and settlement department. And this is coming from the act given PSSA, Payment and Settlement System Act. Under that, that part is coming to the Payment and Settlement Department. I think for that one, so mainly for this question is asked for the efficient payment system. And so that is what, so I explained earlier, for the mainly target for these payment apps. So we have issued this standard for the payment system apps for the minimum guideline for the payment system apps. So that is under that. So there is developments are there. There are many sections are involved, and different sections we have given, and different agendas are there. Then what we have asked for the developers and the fintech companies and the financial institutions, so they have to do this third-party audit and get the compliance report from the third-party audit and submit to the board and get the approval from there and submit to the central bank. There's a major role for the central bank for that one.
Thank you, Mr. Kumaratunge. And next question that I can select from here is: digital transformation is key to efficient and effective government services. How could you address the issues of having 50-60-year-old laws to govern certain governmental activities, services like digital transformation? So anyone, any of our panelists willing to respond? Probably Thilak. I think law is technology neutral in my sense. So,
well, I think there is always a starting point for anything to happen, because the law cannot be changed unless you know what you're going to change. I mean, I would call them use cases. I think we have to find what use cases we are trying to change. Then the law, if it is a sort of a roadblock, then we should change accordingly. But I think from that point of view, I think the financial service sector or the banking sector, I think we have done a pretty good job in terms of changing the whole landscape and digitalizing the whole banking system. So now obviously that's one piece of the puzzle as far as the country is concerned. So now we have to look at what are the other services that we offer or rather receive from the government as citizens of this country. I mean, I'll take simple example like say we do driving license, the revenue license of vehicles, then this whole registration of motor vehicles where there are vehicle transfers and all that one. So I think we'll have to pick up maybe 10-15 such services and see whether the regulatory framework needs to be changed, then I think we'll have to approach from that point of view rather than trying to digitalize the whole country. I think we have to pick up maybe, I think, most impactful citizen services that we want to change. Then I think we do that. And also, I mean, there are other areas like I'm sure central bank has again played a role in terms of coming out with the transit card. So, that is again, I think the massive area of usage on a daily basis by, millions of people. So, do a few things, I think, then, you are digitalizing the country, and then you will find, at the end of the day, digitalization of countries and building ecosystem, right? Sometimes you can build in isolation, then come and connect together. Now, take for an example, we have done the payments. I mean, we have a very good payment system across the banking sector. Now, we also have seen companies like PickMe have done the logistics. Now, use these two as a means to improve the profitability of, say, SME sector. I'm quite close to this one. So you go to Banl, where there are a lot of activities happening. There's a market there, economic center. The vegetable sales happening there. Now, if you connect these two apps, right? Someone in Colombo can order food from or fresh fruit, vegetables from Banl, and you pay through a mobile app which any bank has through Lanka QR and so on. Then the logistic part can be transferred to PickMe, and they can deliver it, right? So I think so when you have digital, your use cases can be endless, right? So I think the regulations to me come. I mean, it's important, but I think if you find your use cases, you can easily do digitalization. So I mean, that's my answer to your question, Digi. Sorry, AG.
Mr. Jayalath, if I can add to what Thilak just said, this is Rajesh Mani here. Yeah, hi. So I have the luxury of having an outside-in view because, I moved in from India about 18 months ago. And the question is very relevant, right? 50, 60 years old regulation. But what we need to look for here is intent. And I think the intent of the government is very clear. Intent of the regulator is very clear that we want to change. We see the world is changing. Digital transformation is here to stay. And two examples for me would be, one, the fact that the open banking framework, the regulator invited participation from private players. It was a joint collaborative effort where people brought in best practices from across the world. So for me, that is a clear indication of the intent of the government. They have taken cognizance of the fact that there are some archaic laws that need to be changed. Point number one. Point number two would be the establishment of the National Committee for Digital Transformation. And one of my colleagues from Mastercard is also on that committee. Again, very clear, and I know Mr. Kumaratunge also is on that committee. Again, very clear mandate. How do we make Sri Lanka future-proof? How do we make them future-ready? So I think the government is seized of this matter, but unfortunately, these things don't happen overnight. And I think we need to be patient, recognize that the intent is there from the government, and we all need to probably contribute and make this a joint collaborative effort. Thank you, Mr. Jayalath.
So if I add, Mr. Jayalath, so the Lanka Clear and the central bank has introduced the Lanka Pay online payment system few years back, and so we are waiting some of the government institutions to join with this system. And at present, only the few institutions like custom in the revenue and the port authority has joined, and we are waiting for the other government institution to join. And also the one problem we are having for the Lanka QR is also, so if you want to introduce to some sectors, there are some barriers with this laws and the act, which having this old 60 years old act, for example, that so if you want to introduce the Lanka QR system for the traffic fine system, then there need to be some changes need to be done for the, I think, for the govern the laws. Then those are the things actually, the question is quite right. And I think, so we need to, I think, pay our attention on these things and make some changes and to do the proposal for the government also. Thank you.
Mr. Jayalath, you're on mute.
Sorry. So we will take up one more question from the question series that what is your view on legalizing cryptocurrency and bringing it into the financial system? So I think I would like to make this open for the panelists.
Perhaps I will offer a perspective on that question, Mr. AG. opening up the financial system to cryptocurrency. I think in my opening as well as in my second round question, I've alluded to the future of money and development around things like stable coins and central bank digital currency. We have to look carefully when we speak about cryptocurrencies. And I think it has been well documented in terms of some of the challenges that we're dealing with cryptocurrency. So I think we need to spend time to make sure that we fully understand the risk and what we have ahead of us. We have seen, for example, in El Salvador, they have moved to use to legislate Bitcoin as a legal tender, and we're seeing developments elsewhere. It is obvious that this development in terms of cryptocurrency, it's extremely volatile. We have seen hacking with respect to cryptocurrency exchanges. We have had some cases. For example, now I've just completed the ICT risk and cybersecurity course at the SEACEN Center. And one of the things that we have learned recently is that one of the drivers behind ransomware is the ability to pay, to demand the ransom and to get the payments in Bitcoins and other cryptocurrency. So I think we should tread very, very carefully with this development. Obviously, stablecoin is an upgrade to, say, some of what we're seeing in the cryptocurrency space. But even stablecoins, as I mentioned, have enormous challenges, and consequently, the Financial Stability Board and the global community is working to develop some kind of a framework for stablecoins. The response to all of these developments, central bank digital currency has tremendous promises, and we have seen the Bahamas and we have seen development in China. But we are still working through some of the nuances with respect to central bank digital currency. So the long and short of all of this is, with cryptocurrency, with all of these developments, we should tread tremendously carefully because some of these things are going to have profound effect on the architecture of our financial system as we know it. And as we heard from Doug Arner earlier today, is that with COVID-19, we realize that there is a fair bit of resiliency in the existing system. So let us tread carefully in how we move along this cryptocurrency space.
Yeah, adding on to that, I would like to highlight the fact that the distributed ledger model, which is the underlying the cryptocurrency itself, has it has been designed to be resilient against monitoring. So in architecture, it has its own technical challenges, like because of its design, whether how to which depth that we can monitor and regulate. Yeah.
Thank you, Dassana. I think everything good thing needs to have an end. So similarly, though we like to deliberate more on this topic and there are questions to answer, so time doesn't permit us to go beyond this. So I must thank all my panelists and their expertise for sharing their expertise with us this forum and enhancing knowledge of all participants, every one of us, and sharing the use cases. Of course, and those will have additional value for every one of us in performing our future tasks. An audience might have received the good input for their thought process. Thank you again for my dear panelists, Mr. McKenzie, Mr. Dharmashiri Kumar, Mr. Dassana Wijesekara, and Mr. Rajesh Mani. Thank you very much again for very fruitful and very excellent discussion deliberations. Thank you again for CBS for arranging this. Thank you for giving us the opportunity to deliberate on this topic.
Thank you.
Over to you.
Thank you.
Yes, thank you very much, all the panelists as well as the moderator, Assistant Governor, for that insightful panel discussion, and also for the participants who engaged very actively. So as you said, we have now come to the end of today's webinar, and before we wind up, let me now invite Assistant Governor of Central Bank of Sri Lanka, Mrs. Nilumani Daulugala, to deliver closing remarks. Over to you, madam.
Good evening. We have now concluded a very informative and enlightening 2 hours discussion on digital financial transformation and how we could achieve an efficient, safe, sustainable, inclusive, interoperable financial landscape. Since the pace of digital transformation in the financial sector has been very rapid, continuous knowledge sharing and discussions of this nature are vital if we are to navigate through all these technological developments and make our systems future-proof. I wish to thank Deputy Governor Mrs. Ivat Fernando for chairing this seminar and for her very eloquent opening remarks, which certainly set the tone for the discussions to follow. I thank Professor Arner for accepting our invitation to be the keynote speaker at today's seminar and for his insightful delivery. I also thank all the eminent panelists for their noteworthy contributions to the discussion on a variety of aspects of digital transformation, which makes this seminar even more thought-provoking and insightful. So Mr. Mark McKenzie, Mr. Dharmashiri Kumaratunge, Mr. Thilak Piyadigama, Mr. Rajesh Mani, Mr. Dassana Wijesekara. A big thank you to each and every one of you. I also wish to thank Assistant Governor Mr. Jayalath for being our moderator at the panel discussion and eliciting valuable ideas and views from the panelists. Last but not least, I wish to express my sincere gratitude to all of you who joined us today virtually. And I hope you found this seminar very informative, timely, and useful. Thank you very much once again and have a pleasant evening.
Thank you.
Thank you very much.
Thank you very much, Assistant Governor. So with that, we have come to the end. So thank you very much to all of you tuned into our program. So we will meet once again with another interesting topic in the future. Until then, thank you very much. Good evening.